Hello and welcome to the IPO Show with me, Aisha Faridi. This is your one-stop destination on Indian television to tell you all about the IPOs. We're going to get you news, views and in-depth analysis on whether or not you should be subscribing to the IPOs, wherein we are seeing a flurry of those we've seen in the year gone by and many lined up ahead as well. Today we're going to be talking about Data Patterns India Limited. They're all set to IPO and hit D Street. It's a company which finds a niche in the entire space sector. We've already seen many successful IPOs in a very different niche of their own, like an MTAR Technologies or for that matter, Paras Defence. So what we're here to analyze is what really is the management commentary, what are their views, how they're going to grow the company forward, and whether or not they can maintain their leadership within the defense as well as aerospace electronics segment or not. So let's first take a step back, try and analyze the fundamentals of the company and how it matches up with its other listed peers like a Paras Defence or an MTAR Technologies for that matter. Joining me right now from my research desk, Srishti Sharma, to get us all the nitty-gritties about the company fundamentals. Srishti?
The company is a vertically integrated defense and aerospace electronics solution provider and has an experience of more than 3 decades now and caters to the developed defense product industry, where they cater to the entire spectrum of defense and aerospace platforms such as space, air, land and the same. In the clientele, they work closely with defense PSUs such as Hindustan Aeronautics and Bharat Electronics, as well as government organizations like DRDO. Now, in this issue, the company is looking to raise 240 crores for fresh issue, and yes, the promoters are also looking for an exit, where on the table they look to put up 59.5 lakhs of shares. Now let's talk about the promoters only. The promoters are well experienced and it is also backed by former Blackstone head Matthew Syrick via Florent Tree Capital Privates Limited, and which holds 12.8% stake in the company as of now. The fresh issue money will be utilized to pay some of the debts of the company. This will also be utilized for the working capital requirements, and apart from that, they are looking to upgrade their only facility that they have right now, that is in Chennai, and they are looking to expand that more. So defense in India is definitely gathering a lot of pace. India is the third largest defense spender, also has a good CAGR growth over the past 5 years, and we saw this particular year MTAR Technologies and Paras Defence come up with their IPOs, and till date they have rewarded quite fairly to their shareholders. So all eyes on Data Patterns now.
So without further ado, let me welcome on board the management of Data Patterns India Limited. Joining me right now is Mr. Srinivasagopalan. He is the chairman as well as the MD at the company, joining in the show right now. Mr. Srinivasagopalan Rangarajan, thank you so much for being part of the IPO show. This really gives us a chance to know you and your company better before you actually IPO and help your investors as well. I wanted to understand, given that defense and aerospace is such a hot topic right now, there are so many startups as well as listed companies like MTAR Technologies as well as Paras Defence, which have IPO'd very successfully. What I want to know is, how is it that you are different? What makes you one of the fastest growing companies within the defense and aerospace electronics sector?
Okay, so let's look at the electronics market or the defense market. What does the services buy? Army, Navy, Air Force. They buy complete equipment for use. That's a large market. We spend about more than 1 lakh crore in capex every year. And so what are they buying is the full systems. So the market size is very large for full systems. What has India been doing? We're buying, majority of our equipment is imported. We do a little bit of value add here, and that is how we've been supplying equipment in India to address the defense markets. So what makes us different? We want to look at the big market, look at the big equipment market, and be the equipment supplier in the Indian context and defense. We would look at companies, who build full radars, ELTA, communication systems, EW systems, Elbit, Thales. We would like to look at and position ourselves to build equipment suppliers rather than be a component vendor or a sub-component vendor. Because the market for a component vendor is what you do within India, what value add within India, you do a part of that, that's a market accessible to you. When you then suddenly say that we can look at the full market size and be an equipment supplier, A huge market then opens out to be. That then gives you an opportunity to scale. So we want to be different and look at it as an equipment supplier rather than a component vendor. That's one. That makes us different from other companies you're talking about. The point two, you talked about startups. Actually, look at defense markets world over. Every company who has made an equipment supply in defense has had a 30-year, 50-year history of building competency, building products, and scaling the products to address markets. Now, in India, and if you look at the big systems, mature suppliers, $30 billion revenue, you look at the revenue model, you'll see that 40 to 60% of the revenue is coming from aftermarket sales. That means AMC revenue and service revenue, and new business gave about 20%. Look at our order book size. We have about 600 crore orders on hand. We have 10% of aftermarket, that is service revenue, 20% in new development, and about 70% in production contracts. So from that perspective, you look at the service revenue you're getting, not much has really reached the end market. That means what? We are in the nascent stage of growth. We have a mature model in the sense that we have a large production contract and a 20% development contract, which is help us scale revenues as we go along. So from that perspective, we can say we are a startup going to IPO. Only thing is we have a 30-year history of product development, and that gives the maturity to build more products and address the large markets, which is what the plan is.
Mr. Rangarajan, Atmanirbharta and Make in India is all the rage right now. But I believe you think a little bit differently. You believe that it should actually be Make for India and with pride. Help me understand, what really has your journey been like?
Okay. See, our journey actually started with the Department of Space. We started building test equipments for Department of Space in competition with companies like Hewlett-Packard. We built equivalent products with our own language. Like HP had a basic interpreter language. We had a data patterns basic interpreter language. We started this about 30 years back. Now we build almost end-to-end all the test systems for Department of Space as a single vendor, on a rate contract. We have done the launch countdown facility in 2001. All the electronics designed by us. We moved from there. We started getting into DRDO. In DRDO, we started building the building blocks, which DRDO was importing from various companies throughout the world. We said, let us build those building blocks, or what they call as commercial off-the-shelf building blocks. We started building our own products, being a product company, then graduated to building custom solutions around it, like cockpit displays, avionics, ground systems, fire control systems for BrahMos. Like that, we started building a number of products across land, air, water, underwater. But while doing this journey, we found that being part of a product, we won't be able to address the service requirement of Army, Navy, Air Force. So we always wanted to build a complete domain and a competency model to build end equipment. The two things we missed was having an RF and microwave competency in 2007-8. We put our own competency to say, now we can build anything, all electronics can be designed by us. So that's one thing we said, okay, it's done. The second thing we wanted to do is build the domain. So we looked at, radar upgrade programs with Department of Space, old radars from Thales, which they bought. We said we won all the contracts for upgrades. Our domain and modern electronics were configured, and this is all working for the last 10 plus years. So from there, we started building complete radars, phased array radars for non-defense applications to get a competency model. We also were lucky to work with DRDO in a number of programs to learn the modern electronics from them, and also worked with the EW group in DRDO, where we could jointly work with them and build complete solutions in EW. So these then gave us the confidence that we can start building end systems. A great, enormous amount of effort which we put with the DRDO, and DRDO supporting us throughout our journey, has helped us really scale that business into end equipment suppliers.
Sure. Let's come to your financial metrics now, Mr. Rangarajan, because I can see that your order book has ballooned. From 80 crore rupees that you clocked in FY17 all the way to 581 crore rupees as of September for fiscal year 22. Even your EBITDA and PAT margins have surged to 22 to 42% and from 6% to 25% respectively. But the point is, can these numbers sustain? Or for that matter, can you even grow more than what you already have in the past?
Okay, see, what we have done all through the last 20 odd years is that build products from scratch. And then we competed with some multinationals offering products which are already designed and built and sold worldwide. So when you when you try to deliver it on a competitive model, be lower cost than the imported equivalents, it necessarily meant that we absorb the development costs. So throughout a journey of 20 odd years in defense, we've absorbed development costs. We tried to be pricing the product on a production model rather than a development version because we have to be lowest quote in our quotations. So wherever possible, we have absorbed and then reused the development across many programs. So the development cost is recovered across many programs rather than one system to sustain. We really didn't worry about bottom lines at that point in time. Our aim was to build full systems and equipment and a competency matrix, which will allow us to build full products, which will give future revenue to the company. It has always been a long-term game. So we've already built products. So that is why when you look at the production contracts happening from the development model, where we absorbed costs and did not make bottom line, and the production contracts happen, all the development costs we've written off on the year of development delivery. And so these are all available now. It is all expensed out. So when the production order happens, our bottom line is jumping. Second point is also when the production order comes, with the revenue jump happens,
Great.
Because of we're only working with raw material costs and the recovery has already taken place, the bottom line and the EBITDA consequently jumps. So this is where it has happened in the last 3 years. We've seen your revenue has, scaled.
Right. Mr. Rangarajan, I'll request you to stay with us. I'm going to take a very quick commercial break, but come right back because I have lots more questions for the management of Data Patterns India Limited. The IPO Show, your one-stop destination on Indian television to know all about IPOs with me, your host, Aisha Faridi. We're still in conversation with the Chairman and MD at Data Patterns India Limited. I have with me Mr. Srinivasagopalan Rangarajan, the Chairman and MD of Data Patterns India Limited. What I want to understand is whether high entry barriers in your industry, will they continue to remain and will they act as a challenge? Also, while I know seeing is believing, what I wanted to understand is what kind of capabilities that you have when it comes to your Chennai manufacturing facility, and what are the expansion plans and capex that you've lined out going forward?
Okay, see, there are entry barriers in this business because these defense equipment takes a long time to develop and mature and also get certified for application. So if you don't have the products, to start from scratch and build takes enormous time. So that is the entry barrier. But then that's just, there are companies worldwide who already have the products. And then the large corporates in India can tie up back to back with them and get their products and manufacture on a work share. So the entry barrier then becomes tie up and manufacture and work share. So that is also possible. But design from scratch is a long-term game. And that's what we have done. We can also do this back-to-back tie-up, but then this is the game which we have chosen to do, and we're also working on more products in these areas. Now, to address the large markets, being from a component vendor, we have a very world-class production design infrastructure at Chennai, already created in 2008, where we are presently residing. We have very modern equipment for automatic production and testing, but we are doubling the capacity going ahead to look at the scale, what we expect to grow. Plus, since we have now built end equipment, we're also creating hangar space where multi-ton metal can be brought in. We can integrate a radar inside. We can bring trucks inside to, put the electronic warfare equipment inside. So what we are actually bidding on CapEx today is to create that scale of manufacturing to address the markets which you're going to address, as well as the contract we're expecting. So we're putting a scale. About 80 odd crores is being spent on the CapEx. We are now looking at about 60 crores out of IPO proceeds to actually put the additional infrastructure which we need. This is where we are. We are preparing ourselves for the future. One, to execute the contracts on hand, and also the future expected large contracts. We need to have a delivery mechanism. That's what we're building today.
Great to have you on the show today, Mr. Rangarajan, and good luck with your IPO.
Thank you very much. Thank you very much.
Okay, so now let's debate about that one key question grappling all of our minds, whether or not to subscribe to this IPO. Of course, a lot of it is going to really depend on what kind of valuation the IPO price is actually set at. But that said, let's take in an analyst perspective as well. Joining me on the IPO show today, Astha Jain, the Senior Research Analyst at HEM Securities, on the show right now. Astha, hi, great to have you on the show. Astha, when it comes to Data Patterns, I don't think the financial metrics are a key question. It seems like a very, very sound company. I was just chatting with the management, and they've indicated that their order book is only growing even further. It's already from that 80 crore rupees that they clocked in FY17 has grown to 581 crore rupees as of September in FY22. Given their efforts in development of products, their revenue from operations, they've already increased from 131 crore rupees to 224 odd crore rupees between FY19 to FY21. And even their EBITDA and PAT margins have now surged all the way to 42% and 25% respectively. Also, to add to that, they're very confident of even growing these numbers and adding on to them even further. But from an analyst's perch, how is it that you're viewing the company in terms of how fundamentally sound they are?
Hi, Aisha. So talking about the fundamentals of the company, the first thing which I really point out about this company, that this is the only Indian company which is into the entire spectrum of the, which is into the designing and development in the entire spectrum of this aerospace and defense electronic solution. So first of all, this makes this company unique. And secondly, if we talk about the financials also, so financial, as you have rightly said, their financials are looking very strong. And I want to tell you one thing, that their financials are just like, if I compare it with the other peers in the same space, they have really outperformed the peers, not only on the EBITDA margin front, which is a very important ratio, but also on the other parameters like ROE and ROCs, because this company has, for the FY21, what I am making out is that they have posted the margins of around 25%, which is really very commendable. And not only that, ROEs are around 27%, and ROC is 35%. So again, fundamentals are very solid. And talking about the order book, yes, this order book always plays an important role for these companies, and this gives a revenue visibility also. So if I talk about the order book also, this order book of September ending FY22, I mean, this is almost twice of the revenues which they have earned in FY21. So this gives a very strong revenue visibility. So looking after all these things, or looking after the strong fundamentals, and it is into the defense space. And what we believe that in the coming few years, the company will be an important participant in the 1,500 crores of contract over the next 3 years. So again, this will give a huge impetus to the company's financials going ahead also. So looking after all these strong points, I believe it is very strong fundamental story, although we have to wait for the pricing and then I can comment on the valuations. But looking after the strong fundamentals, I mean, their unique position in among the peers, I find this company to be a great investment option, provided if the valuations, whatever the valuations they will be bringing, we need to see on that. So if valuations will be in the comfort zone, then definitely it will be a great investment option.
Sure, absolutely. A lot is also going to depend on kind of, the valuations and what kind of value they put on the table for the IPO subscribers. But Asta, given that, we've seen a very successful batch of companies from within the same space, although in a different niche of their own, like an MTAR Technologies, which was another very successful IPO. There's also Paras Defense as well. But I'm wondering whether or not, Data Patterns can continue to be the fastest growing company within the space that's defense as well as aerospace electronics.
Yes, I'm pretty much sure, looking after the fundamentals of the company, they will continue to grow, looking after, first of all, the order book, the kind of contracts we are expecting in the defense sector to be provided to these defense companies going ahead also. So we are quite optimistic on the fundamentals of the company. And one more thing here I want to highlight, one point is that MTAR Technologies and Paras Defense, they have got huge thumbs up, they have got huge subscription level, and they are running at quite high valuations. If we talk about the PE multiple, at present moment of time, both of them are trading at the PE multiple of more than 100 times. So this itself shows that how much this space, how lucrative is this defense spaces, and how investors are really finding it an attractive avenue to deploy their funds in. So we are pretty much sure about this space as a whole as an investment option.
Okay. Asta, great to have you on the show. Thank you so much for taking the time out and analyzing data patterns for us. That's it then, ladies and gentlemen, in this edition of the IPO show. I hope we were able to answer all of your queries, the management perspective, the analyst perspective as well, and data patterns India Limited. We'll be back with another IPO, same time next week. Thanks very much for watching.